Hey, what's going on, guys? Wanted to shoot a quick video today looking at some of the most popular YieldMax funds and how they've been performing in the first couple of weeks of 2025. And I want to talk about the strategies that I'm going to be using to build out some of these positions. So let's go ahead and look at some of the data here in the spreadsheet. So zooming in a little bit further, we can see, some of the top funds in this list are MSTY, TSLY, CONY NVDY, and so forth. And I believe I have the data currently sorted by the volume. So that's the first thing I kind of want to talk about is kind of my plan going forward when building out these positions. So currently, what I have been doing and, trying to implement. So there's different ways to build out positions, right? So you can lump sum invest, buy a certain amount of shares at any given point, and then that's it. You can dollar cost average over time, or what I am trying to do is get in and out of these positions pretty much every day. So just understand your risk with that. But my plan is to, profit from trading. These funds particularly have the most volume, and they are some of the ones I want to, continually build up positions in. And the plan is to, buy 100 shares here and there and profit when it goes up. Obviously it's not going to be attainable to be perfect every time, right? Sometimes I'll buy and it goes down, so I might have to hold it a little longer. So that's kind of my strategy with that. Buy 100 shares, it runs up 10, 20 cents, either sell out completely of the shares or keep the profit within. Something you have to keep in mind is wash sales, and definitely seek your own tax research and your tax professionals for particular questions regarding that. But for the most part, I'm gonna purchase like a starter position, whether it's 10 shares, 25 shares, 100 shares, and then pretty much not touch those, right? Let those grow, let those get paid out dividends every single month. But then I'm going to use additional capital to get in and out of the shares, right? I won't sell the original lot that I have. And I hope this kind of makes sense. But, the whole idea is let's make another spreadsheet here. So let's say we purchase 100 shares of MSTY. So, Google Finance, MSTY. So that's going to cost us, roughly $3,000, right? So 100 shares times the current price of today equals, today, the 14th of January. So our basis is $29.98. Some people can just, are content with doing that and letting the distributions every single month essentially pay you back. And then eventually, once all your capital has been returned to you, then it's house money. That is a solution, or that is a strategy, and a lot of people use that. What I am going to be trying to do is, keep these lot of shares. Don't touch these lot of shares, because if you don't, if you keep selling and buying, selling the same ones, you're going to run into an issue with wash sales, right? So we'll just keep these over here. And then over here, we're going to be doing the same thing. But our hope and our plan is that, we then sell these shares for, 30.20, right? So that's a net of $22. So then our new basis is this. So we're slowly lowering our cost basis by executing trades over here, right? And then over time, we hope to get our basis down to zero. And I messed up something in here. Let's see. So it's minus 154. So whatever, right? So then our true basis then is, you know, what is 2910? Is that not? Oh, okay. Yeah, that's. So then this is our true basis. So our really, 28.44 instead of 29.98. That's the strategy I've been looking at doing. Some people implement covered calls and cash secured puts to kind of leverage their position that way. That's something else you can look into as well. The problem with that is the liquidity on some of these tickers. There's not a whole lot there. Now, what you could do, you could look at, so for example, of MSTY, you could use MSTR or MSTX or some other underlying asset, sell covered calls, sell cash secured puts on these, and then, deploy some of the profits from the trading profits from that into MSTY. That could be something you do. A lot of people do that as well. So there's tons of different strategies to use and to leverage. So those are some things I'm looking at implementing in 2025. So looking at some of the numbers here, I kind of calculated this data. Let me know if you guys want this. You can also fetch this from like totalrealreturns.com. It's a good website. This column is just specifically price return. So it does not include the dividends that have been paid out. Because that the total real return of MSTY would be, is definitely much higher in 2024. But, the problem with, and that's something I kind of want to talk about as well, the problem with investing into funds with these high of yields is like NAV erosion is something that's very likely to happen. And the way you combat that is dripping your dividends. And that can be fine until, your original basis is relieved or, but, I'm thinking of the long term, right? And I don't want to always have to drip my dividends in order to kind of hold my asset value, so I want typically to implement a strategy, whether I'm reinvesting 50% of it, 25% of it. I think the sweet spot for me is like a 10% yield. Obviously I don't think, stocks are always going to be able to outperform 10%, especially the underlying. But I think that would be a number that would make sense for me. So example, this one's like a 31% yield, whatever this one is. This is GUI. So drip 50% of that dividend back into the fund every single month. So you're getting like a 15% yield. I think that makes sense. And then some of these smaller ones, so what's 10.97%? That's AAPY. These are some curve funds. I think those will definitely hold up better as far as, the NAV erosion goes, right? Because their yields are much lower, closer to that 15, 10, 15, 20% yield. That is kind of where I would feel comfortable with. So for this, 91% is a lot. And so maybe I live off of 10% of it, right? So like I get $1,000 or, whatever it is, 25%. But there's different ways, different strategies to kind of implement. And these are just some different thoughts that I have as far as how to combat with yields, this high and how to deal with NAV erosion. Some other things to think about are taxes. Definitely make sure you understand the risk, not risk, but just understand how those work, right? Yeah, like you might be, and we've talked about this in other videos. Yeah, like MSTY, or specifically, I think it was QDVO or something like that, outperformed the NASDAQ 100, but that was before taxes. So you have to consider taxes in these calculations and comparisons and so forth there, if you have it in a taxable account. Now, if it's in a tax deferred account, something like that, then you don't necessarily have to worry about it. But yeah, some things to consider. Let me know your thoughts down below. Let me know if you want access to the spreadsheet. So far year to date, most of these funds haven't. Most of the curve funds, I think they get paid out whether this week or not this week, but I think they get paid out next week. MSTY is getting paid out this week. TSLY hasn't gotten paid out yet. But as far as the best performing ones year to date so far, MSTY seems to be leading the way, followed by TSLY. So if we sort this column real quickly, zoom out a little bit so you guys can see what ticker it is. Yeah, so the leaders so far, MSTY, TSLP, TSLY, GUI, Goop, and so forth. It's actually surprising GUI's beating Goop. But yeah, time will tell once these first distributions come out for sure. But so far, MSTY's up 10%. And I think probably shareholders are pretty happy with that. It has pulled back a significant amount since I think it was like November 20th. I think that's when it really started to pull back. If we plug that in right here, we should be able to see, I think it was like 11, 20, 24 is when things really started to pull back. Okay, so regardless though, in the first few weeks of January, it's been doing pretty well. And time will tell. But let me know your thoughts down below. Are you guys implementing strategies, something like this? Covered calls or trading, or you just dollar cost averaging into these funds, or are you just buying the underlying? Like obviously hindsight for 2024, if we all would have bought MSTR, could have been a great move, right? It was up one of the leaders in the space for sure. But who knows for going forward. Michael Saylor's wanting to dilute a lot of their shares to buy more Bitcoin. Whether that is going to be a good thing or a bad thing, time will tell. Especially, there's a lot of volatility coming up with Donald Trump being officially in the office next week. So who knows what's going to happen? A lot of uncertainty. But yeah, curious to hear your guys' thoughts. Let me know down below. Do you like these types of videos? Would you like access to the spreadsheet where some of this data is calculated? Let me know down below. I can provide that. I can put it in the video description. But yeah, guys, that's going to be it for today's video. Please like and subscribe down below.